recalls like this one.
That was our correspondent Roland Burke. Now, more details are emerging on the planned bank levy. The government has published draft legislation and says the levy, which will apply to the global balance sheets of UK banks and the UK operations of banks from other countries, will be introduced in January. The rate has yet to be finalised, but it's thought it will start at around 0.04% in the first year, rising to 0.07%, and that certain items will be excluded. It's estimated that £2.5 billion should be raised annually. Well, Angela Knight from the British Bankers Association has warned that the levy could prove damaging to the UK's competitiveness.
Some countries are putting in place bank levies, but most are not. And so what is important is, as we work through the detail over this next few weeks, that we focus on the two areas of, firstly, making sure that this doesn't make the UK internationally an unattractive place from which to do business from, and secondly, what the effect could be through on, for example, individuals borrowing money, or indeed businesses, the finance of business. So those two things are of vital importance.
I'm joined now by Chris Roebuck from Cass Business School. Good evening, Chris.
Good evening.
Now, Angela had two concerns there. One, that the levy could make the UK an unattractive place to do business. And secondly, it could affect how much the banks would lend to individuals like me and you, or to businesses. Do you think she's right to be concerned?
Well, banks get in a certain amount of money, just like any household, and they have certain expenses. And effectively, they have to lend money out. They have to keep more money now for emergencies. They have to pay their shareholders. They have to pay their staff, and they have to pay tax. So what the banks are saying effectively is, look, you're making us keep more money for emergencies. You're making us pay more tax. So actually there's got to be some give somewhere. And it could be the fact that we might not be able to lend as much. But equally, the government are saying, well, couldn't you also reduce dividends or reduce pay? Because that's another way of getting to the same result. So there'll be some negotiations, I think, with the banks and the government about how this is going to happen. But in terms of the global perspective, we have to remember that even those banks we think of as British have significant business outside this country. And if other countries are offering those banks the opportunity to have less tax on their profits, we can't push too hard in this country, or they will move their money elsewhere.
Now, what about some of the things that the levy will apply to? We've been told it will apply to their total balance sheets, but actually some items are going to be excluded. What are those and why? Well,
they're primarily excluding particularly retail bank deposits, and they're excluding things that are effectively less risky than the risky things that created the financial crisis. So in simple terms, what they're trying to do is they're trying to get the banks to focus on investments that are more risky in terms of higher rates that they have to pay on the levy, and the less risky investments they're likely to be involved in lower rates. So really it's about trying to get them to change behaviour.
OK, and just very briefly, there's been a lot of criticism about the fact it's not only going to raise £2.5 billion a year. We've been told that's not enough. Very briefly, do you think that is enough, or should they have pushed for more?
I think the government has to be very careful, because as far as the banks are concerned, if they can move money to somewhere where they pay less tax, that is an obligation they have for their shareholders. So we have to balance it and see how we go in terms of negotiations going forward.
OK, Chris Roebuck from Cass Business School, thank you for your time this evening. Now, in other business news,